Forex regulation and compliance across EU and US. If you want to trade Forex safely and confidently, understanding regulation and compliance is critical. Europe and the United States are two of the most tightly regulated Forex markets in the world. And knowing how these rules work can protect your funds and guide your trading decisions. Today, we'll break down Forex regulation across the EU and US. Let's start with the European Union. Forex. Brokers in the EU are regulated by national authorities under the framework of MiFID II, the Markets and Financial Instruments Directive. This directive ensures that brokers follow strict standards for transparency, risk disclosure, and investor protection. For example, the Financial Conduct Authority (FCA) in the UK, BaFin in Germany, and SICC in Cyprus oversee broker licensing, segregate client funds, and enforce compliance audits. EU regulation also sets leverage limits. For instance, retail traders are limited to a maximum leverage of 30-to-1 on major currency pairs to reduce risk. Now, let's talk about the United States. Forex trading in the US is regulated primarily by the Commodity Futures Trading Commission, CFTC, and the National Futures Association, NFA. These authorities impose strict rules on brokers, including mandatory registration, transparency of pricing, leverage limits usually up to 50-to-1 for major pairs, and capital requirements. US regulations are among the strictest in the world, ensuring that traders have a high level of protection against fraud or malpractice. Compliance is also a major focus in both regions. Brokers must maintain segregated client accounts, conduct regular reporting, and adhere to anti-money laundering (AML) and know your customer (KYC) regulations. This ensures that client funds are protected and trading activity remains transparent. It's important to understand the impact of regulation on traders. Regulated brokers provide security, reliable execution, and dispute resolution mechanisms. However, stricter rules may also limit leverage or certain trading strategies, especially for retail traders. This is why choosing a fully licensed and compliant broker is essential. It's the foundation for safe and long-term trading. To summarize, Forex regulation in the EU and US is designed to protect traders, ensure transparency, and maintain market integrity. EU brokers follow MiFID II guidelines with national oversight, while US brokers operate under strict CFTC and NFA rules. Compliance, fund security, and risk management are key priorities in both regions. For traders, understanding these regulations ensures safer trading and informed decision-making.